Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Wednesday, July 22nd. Firstly to gold futures, and here we see a continuation of the trend to the downside on this second last candle on the chart here. There was an opportunity for the buyers if they were strong enough to change the trend following the loss of strong commitment, but very often when we see these extreme days that we saw 3 trading days ago, the follow through is not there to the downside, and also the response from the buyers tends to be rather meek, and that's what we saw with yesterday's trading, where we saw formation of a very small bodied candle but a large shadow on the top of the candle, highlighting that the buyers lost commitment as they tested up around this 1110 region. Today we've seen the sellers come back into the market to a degree. We've seen formation of a black body candle, but a candle where the sellers have failed to close with control by closing roughly around the midpoint level in it suggests that the sellers lost commitment down around this 1084 level of support, as they did 2 days previous, just below their strong support came into the market. So that's going to be an important level for gold futures over the next couple of trading days. The loss of control by the sellers here suggests that we could see some buying coming in, but with the formation of a black body candle, once again, it suggests that the sellers have attempted to build some momentum in net terms between the open and the close, and they may be building that momentum for an attempt below 1084 again. If we do trade down below that 1084 level, we have support down around 1075 and the 1072 region. Any rally, and if we do see a substantial rally, is likely to find very strong resistance initially at the Tenkan-sen, trading about 1121, 1122, and then just above there the 1124 region. This market is looking a little overextended in the depth away from the Ichimoku cloud, so wouldn't surprise to see something of a retracement of this very strong first time frame downtrend that we saw, but we're not seeing any strength from the buyers here, so any retracement is likely to find resistance initially at that Tenkan-sen, as already mentioned. Now, just using the Fibonacci extension tool here, and we're examining the relationship of this current first time frame downtrend that the market's in, and has been in for quite some time, for about 2 weeks now, and comparing that to the immediate previous first time frame downtrend. And here we've seen over the last couple of days the market testing below the 261.8% level at 1092, being rejected from there, failing to close below there, suggesting that there is a good likelihood of a change of trend. But we should have seen the buyers coming into the market a little bit more strongly a couple of trading periods ago when we tested below there on that extreme candle. We haven't seen that. So if we see a strong bearish close down below this 261.8% level, it suggests that we certainly could see this trend continue to the downside. And just looking at the Fibonacci retracement tool and comparing this current first time frame downtrend to the immediate previous first time frame uptrend, and here we've seen extreme trading down to the 423.6% level, testing very close to there and being strongly rejected from that area. This is an extreme level. It's very rare to see markets trading down to this 423.6% level, and very often when we do, that tends to be the extent of the move and we see a retracement. So there is a possibility of the market testing back down to this level. 1077 is where it trades at the moment, and if we see the market test down there, we could see some price rejection, but it is suggesting that we may see some buyers coming back into the market over the next few days if this level at 423.6% holds. Now, just looking at the bands here with gold futures, and here we see the very dynamic downtrending price action. The bands becoming very wide, and that's because we now have volatility in the market manifesting itself as downtrending price action. We saw prior to that the tightening of the bands here, but the breakout down below the lower band, the market rallying here to find resistance around that middle band and then selling off, and finding resistance prior to this very strong sell-off at the lower band. And this is very often how we have this strong downtrending price action in the second time frame manifesting itself. If we do see a rally here, and there's every likelihood that we will, with this being some extreme trading at the moment, we'll be looking to the lower band at 1119 to act as very strong resistance. Next to NYMEX oil, and here today we've seen a very strong breakout down below the 49.90 level and the important $50 round number. The sellers have taken control of this market. They've shown strong commitment, and to breach the $50 round number level in such a bearish manner suggests that the bears are very much the stronger party in this market, and every likelihood that they will eventually test to lower levels, and the next support level is down at 46.72, save for an intermediate level down here around the $48 level. There is a possibility of the market attempting to rally, but with the market breaking out down below the $50 level, we're likely to see the round number $50 level hold as resistance now, as we know that previous support can very often turn into resistance. So that's what we'll be watching for if the market does attempt to rally. If we do breach up through there, looking to the Tenkan Sen trading roughly about 51.25 to hold as strong resistance as well. But we do have a strong bearish market in all three timeframes, trading below each of the Ichimoku indicators. The Chica span is suggesting we have strong downside momentum in the market, and it's supporting this trend in all three timeframes. The Chica span, the depth of it away from the corresponding price action is starting to look a little overextended, but the depth of price action away from each of the Ichimoku indicators is not looking too great, and suggesting that we could see a continuation of this trend to the downside. Next to the bands here, and we see very strong negative trading down below the lower band. What I want to look at here is the squeeze here that happened with the bands, and that's very important to us as traders. And we know that markets move in a cyclical way between high volatility and low volatility. The low volatility tends to manifest itself as congestion, but not always, but it tends to. And the high volatility tends to manifest itself as trending price action, but not always. Here we saw this weakening of the bands coming together. The breakouts that we saw in either direction were very mild, and there was no follow through until we saw the breakouts here, and we saw a strong negative price action gapping down with the buyers as the sellers in control, and the strong follow through. The bands are now widening because volatility is coming into the market, and here is the typical way that we see the how the trend begins with the breakout, the retracement back to the lower band, and then the continuation of the sell-off with the lower band holding as resistance, and we've seen that for the last half a dozen or so candles. If this market does attempt to rally, we'll be looking to the lower band at the moment at $50.19 to hold as strong resistance. Any rally to within the bands is likely to find resistance at the middle of the bands around 53.56. Next to wheat futures, and a continuation of that strong selling in the market over the past couple of trading days. Another black body candle following the strong negative breach down below the 526 level, which was the bottom of that highlighted zone of previous support and resistance, and the strong follow through here suggests that we certainly could see this market trading to lower levels. A very good answer now from the sellers to this strong breakout up above the Ichimoku cloud and the Kijun Sen and Tenkan Sen, and the market is testing now very close to the Ichimoku cloud and suggesting that we have equilibrium in that longer term time frame. If we do see a continuation of the selling down through the 516.50 level of support, we'll be looking to the Ichimoku cloud around 508 down to very close to the round number 500 to hold as strong support, and any potential rally off these levels may find resistance at this highlighted zone, extending all the way up to about the 547 level. The trend in the medium and fast term timeframes obviously is negative. And if we look at the Kijun Sen and Tenkan Sen, we're trading below both of those indicators. And with the Kijun Sen pointing flat, there is a possibility of the market testing back up to the Kijun Sen to find some equilibrium in that middle time frame. The Tenkan Sen, the green line here, representing the trending price action in the fast term time frame, is pointing down very sharply, and that's reflecting that strong downside momentum in this first time frame downtrend that we've seen. If the market does rally back up to the Tenkan Sen, there's likely to be very strong resistance around that region, and it's roughly about that 550 level at the moment. Next to corn futures, and quite negative trading today, and here for the previous day's trading we saw the formation of a doji type candle. Very often dojis can signify the potential end of a trend, and we were looking for that to happen. A doji candle is a candle of indecision, and coming off the back of these series of very large black body candles and the market gapping down, it suggested that the downside momentum was no longer with the sellers and a possibility of a change of trend. And that's why it's important to remember that when we're looking at these candles, the introduction of doji candles and indecision in the market suggests possibility of a change of trend, not a certainty. So what we want is confirmation. So what we were looking at here with the formation of the doji was a higher high and a higher low. Now the market opened well below the previous low and sold down through the 417 level of support in a very strong manner, and suggested that certainly the sellers once again were the stronger party in this market. The market never traded anywhere near the highs, and there was no chance of that trend changing. So with these candles and reading what they're telling us, it's all about probability, and we need confirmation. And what we saw here today was confirmation of a continuation of the trend to the downside. So the sellers have come back into the market. The formation of a larger black body here suggests some downside momentum, and suggests we could see corn futures continue to trade lower. We'll be looking to 406.25 to hold a strong support, but we did see some commitment lost as evidenced by this shadow. So the sellers closed with control, but very, very weak control. They've closed just below the midpoint level, and it suggests that quite a bit of commitment has been lost by the sellers. So once again, watching the low of this current candle at 410.25 for a potential continuation of the trend to the downside. Now interestingly, with corn futures, if we place our Fibonacci extension tool on here and we're examining the relationship of this current first time frame downtrend that the market's in to the immediate previous first time frame downtrend, and here we see the market trading around the 161.8% level. The prior day's trading we saw the formation of the doji candle. It suggested very real possibility of a change of trend. We haven't seen confirmation of that, and for today we've seen the market test below that 161.8% level and close just around there. So a lot depends on how the market reacts around this level. If we see buying coming in, we could see a change of trend to the upside, but with the a build of downside momentum in net terms, it suggests we could see lower levels if we see strong bearish activity down below this 161.8% area. The next level to look for is the 261.8% level down at 391, but between here and where the market's trading and that level, we have the Kijun-sen trading around the 400 round number, and we're likely to see strong support coming in there before the market tests down to the 261.8% level, all in that first time frame downtrend. Next to the US 30-year bonds, and this is probably the most uninteresting of all of the futures markets. Most of them are showing very dynamic trending price action. Here we see an uptrend in the first term time frame and a white body candle, so the buyers continuing to build some momentum, but something of a spinning top type candle, rejection from the 153.11 area, upside rejection from the 152.19 region, so some doubt about whether the trend will continue. If 153.11 is breached in a bullish manner, we could see this market trading to 154.27, but we see formation of a very large congestion area. We are trading within the Ichimoku cloud, so neutral market in big picture terms, but a bullish market in the medium and fast term time frames, with the market bouncing off the Kijun-sen support over the last couple of trading days. Just looking at the Fibonacci extension tool here, and here we saw previously the market testing around that 61.8% level, no confirmed change of trend, and a test down to lower levels with the Kijun-sen, as I've mentioned, holding a support. The market then rallying through there in a bullish manner for the previous day's trading, and testing to the 78.6% level with some price rejection, so possibility of change of trend, but we should be watching that area carefully. But if the market does rally through there, possibility of a test to the 100% level at 155. and to the S&P 500 on the hourly charts, and for this trading session has completed. We've seen negative trading down below each of the Ichimoku indicators at the opening of the session. The market then rallying through the Tenkan-sen to find very strong resistance at the Kijun-sen halfway through the day, and then selling off of rather weak indecisive trading and hovering above and below the Tenkan-sen, with the market lacking any clear direction. For the new session, we've opened up above the middle pivot point level, rallied over the last few hours to find strong resistance at the first pivot point resistance level, which coincides with the bottom of the Ichimoku cloud. We're going to have to see very strong buying if the market is going to breach through that area. If we can, we then have strong resistance around the top of the cloud, roughly up around 21.16, and then the second pivot point resistance level at 21.18. Any selling coming off this resistance at the moment is likely to find some strong support around the middle pivot point level and the Kijun-sen trading around 21.08. But if that's breached in a bearish manner, we could easily test down to the first pivot point support level at 21.04, which is very close to that round number 2100. And just looking at the bands here with the hourly charts, and here we saw the squeeze going on late in today's trading session. It has finished. We've seen a strong bullish breakout to the upside, the market retracing and finding strong support at that upper band over the last few hours. If the market does retrace, we're looking to strong support at the upper band once again, 21.11, and any breach down through there is likely to see support coming in at the middle of the bands at 21.08, and then down below there we have the lower band, 21.05, corresponding with that level we were looking at with the pivot points.